If you would like to continue following our market analysis and get access to other free education, sign up for our free room with the link in the description.
Right now, we're at a really interesting point where we're so close to having a massive short squeeze and a market crash at the same time, which is kind of crazy to say that both of those possibilities are are very imminent. So at this function, it's really just all about price action and seeing where this price action is going to take us. Because down here on the lows, emotion is high. And so when you're looking at, how is that emotion going to play out now that the market has opened after 3 days, that is really the core question here. So looking at the S&P, we are gapping up, and we're gapping up a pretty substantial amount. I mean, 61 points, 1.68%. I would consider that a pretty decent gap up. Usually, if there's going to be a short squeeze, it'll happen on a gap up like this. So the gaps that have been like 0.5%, 1%, they haven't been strong enough because you have to think about it like this. You have to imagine you're short and the market gaps up. What amount of gap is going to make you nervous enough or losing enough money so that you will want to get out? Because that's really the question here. When you're looking at, for example, the S&P and it's up, 65 points, if you shorted it on Friday, is that going to make you cover, or is that going to make you add to your short? And so that's really, what people are considering here at this moment in time. And so the way that we discover which choice that is how this ends up playing out right here and now. So as of right now, we're definitely seeing some buying. You can tell that because this candle is this candle is number one, bright green. So that is telling you that it's in a short-term uptrend. Number two, it has this blue dot on it, which means that it's a high volume bar. So that means that you have high volume coming in right on the open. And then also we have incredibly high ticks. The ticks opened up at 15.19, which is extreme buying right on the open. So the thing about it is that sure, there could be high volume to the upside in the first 3 minutes of the day, but is that going to continue or not? And you can see that answer through the ticks. Oh man, the put call is crazy. The put call gap down to 0.44. That is a massive change. So when you're looking at the put call ratio on a 5-minute chart, the number one reason I've been looking for a massive short squeeze is because the put call ratio got incredibly high last week, up at 1.35. What that means is that literally everyone is short, and the most amount of traders have been short. The most amount of traders were short last week than have been short since March of 2020. Does that make sense? See if I'm saying that right. We had the highest amount of short interest in the market last week since March of 2020. So when you're looking at that, what that means is that the stage is set for a massive short squeeze. Now, what ended up happening on Friday was we had a little bit of covering. So we had short sellers either getting out, buying calls, combination of the two. Now, today, the put call ratio is gapping down to extreme lows. So that's indicative of the fact that, people are either getting out of their shorts or they're actually coming in and starting to buy calls, and everybody's like, yay, the low is in. The most destructive thing for an increased rally here would be everybody buying calls. Like literally, if everybody buys calls here, this thing is going to roll over and die. So this is a very, very interesting point to me. And then also the other points are going to be the overnight highs. So the main levels to watch, I mean, we're not far away at all. 3750, major line in the sand. If the S&P can manage to get up above that level, I would expect a stronger short squeeze today. Generally, up above that level is where you'll really start to see a rip. So, right now we're 6 points away from there, and let's see if we can get up to that level and most importantly, actually get through it, because that is where I would expect to see a big burst in price higher as the short sellers continue to cover. Now, the Nasdaq has just broken through the overnight high. So that's exactly where I would look for that same burst. And the Nasdaq is up more than the S&P, which makes sense because the Nasdaq has been the relative strength loser all year. So, you definitely have a lot of short interest in the Nasdaq in particular. So when you're looking at this, we've broken through the high. At this point, your next target would really be up here at 11,600. Let's call 11,600. You're almost there. 11,634. So this morning is all going to be about the ticks, whether or not there's going to be continued buying. Because what has happened in the market this year so often has been these little blips at the open that just roll over and die. I've been watching and waiting for like an actual breakout, big move, short squeeze that we can come in and we can buy, Apple and Amazon and all those major tech stocks. But there really hasn't been an opportunity, because every single time you get one of these opens, it will just gap up and then roll over and die. So that's why right here and now, you got to give it at least another 15 minutes to make any kind of determination. As far as the higher time frame charts, we're definitely down on the dead lows. We've rallied just slightly up to the 8 EMA. If we do get a more sustainable short squeeze, then we're looking at 12,000 as the price target in the Nasdaq. And the lower time frames, we are seeing a shift. You can see that this squeeze has fired to the long side. This squeeze has fired to the long side. You're also seeing your candles go from red to yellow to dark green to light green with high volume. All of that is indicative of a trend shift. Let's just see how long it continues. And right now we're at 37.49, 37.50. So this is the key line in the sand. Can you do it, Mr. S&P? And then, yes, I will be happy to look at Amazon. Let me know what other tickers you would like to look at. I was primarily going to look at the big, I was primarily going to look at the major Nasdaq players. So looking at the S&P, the next target is going to be really about 3,800. So if we can break 3750 here, 3,800 is going to be the zone that you're looking for. Then after that, 3,900. So that is going to be where we're looking. These lower time frame charts, yes, they have shifted higher, but that doesn't mean they will continue. All right, let's check out Amazon. Question for y'all. Hopefully it makes sense. I have two charts, toss, one above the other. Both are linked to show the same symbol. Both are set to the same time frame. Each chart has different indicators. I'd like the time axis to move together at the same time. I don't know if that's a thing. Because, I mean, you're saying that you want, okay, so you have two different charts. So mine aren't one over the other, but I mean, they're, next to each other. The only, and I'm also, full disclosure, I'm not the best technology person. My husband is the King Technology Guru here, and he basically helps me with all kinds of stuff like that. But as far as, you know, wanting the time axis to be the same on two different charts and have it scroll together, I don't think you're ever going to be able to get it to, you know, when you enlarge this one scrolls, because that one's a 78 minute. This one's a 78 minute. So if I change this one to a 78 minute as well, I mean, they're not going to, like, you can't scroll into this one and have this one move. That's not a thing as far as I know. What I do to make them the most similar as possible is I just go into here. Let me see if I'm going to the right spot before I explain this whole thing. Okay. So what I do to make it so they have at least the same distance on here is you just want to right click and go to style and then go to settings. And you can go to time access. For me, since I use a lot of Fibonacci levels and I like to draw on my charts, I personally like to have extra space over here, because that way when I draw my fib levels, I can see the targets and it's not cramped all the way at the end of the price isn't cramped all the way at the very end here. So I like to have the expansion area the same on my charts so I can compare. So this, for example, is 10 bars. So what it does is it just adds 10 extra bars here that are, you know, invisible, 10 extra bars of space. And then if you do it on this one too, so that one's 10 bars too. And then that way you have the same amount of space, but the only way that you're able to scroll so they're the same is you just have to, like, for example, if you want to look Wednesday through Wednesday, you just have to scroll on here like that so that it's exactly the same. And you can unlink it, you know, and make this one Microsoft. And then if you're trying to compare the two, you just have to have the same amount of time, expansion area, and then you just go like that, Wednesday to Wednesday. Does that make sense? I don't know if anybody else has a additional suggestion that I'm not thinking of, but that's how I've always done it. Because you can't really analyze a chart without looking at it and zooming in. Yeah. So I know what you mean, because I have to make a lot of slides and stuff for classes, and you're always trying to compare like the exact same time frame. And yeah, sounds like an Eric Purdy question. That's why I have the Phoenix Finder, because that whole question to me just drove me insane. So that was why Eric came up with this, because it's the only way that you can compare everything on one screen. Yeah. So like with the Phoenix Finder, that's basically what it does. Like, it takes all the data from the same exact time frame and it compares it all in one spot, because I know what you mean. That made me crazy. So let's actually look at the let's look at the Grandma Loves It list. Actually, I don't know that I have Amazon on here, but I can switch it out for one, because Amazon definitely looks like it is on the move here. It looks like it's on the move here. It looks like you could at least trade it higher. So if you go down to, for example, like a 15-minute chart, this is really the only way that you're able to kind of compare everything on the same time frame. So, you know, you've got Apple, Microsoft, Amazon, Tesla, Nvidia, and AMD all triggering to the upside on a 15-minute time frame. You also have Costco, Lowe's, John Deere, Walmart's trying, CVX is trying, United Healthcare is triggering. And then if you go to a 30-minute time frame, you definitely have, you know, Amazon, Microsoft, Apple, Tesla, Nvidia, especially Nvidia is really lighting up right now, John Deere. So, I mean, you definitely have these stocks triggering higher. To me, it's just all a function of how long it's going to last, because here's the thing is, like, I've been remaining short. I did cover my shorts last Tuesday right before the Fed, because I had thought that the likelihood of the Fed setting off a massive short squeeze was pretty high. So here, what I'm doing is saying, okay, I know there could be a short squeeze at any moment. I don't necessarily love the idea of getting long, but I would do it if there was a short squeeze. So when you're looking at, for example, Amazon and saying, okay, is this something that I could trade higher? I mean, yeah, you definitely could try. Longs in this market haven't worked at all, but you know, they'll work on a short squeeze. So when you're looking at Amazon and saying, okay, is this a time where I could buy it? It's almost up 3%. It's up to 8 EMA. Like, if this market keeps going, then where's it going to go? Well, your next target would be 112. So my upside target on Amazon was 110. That's basically been met as of right now. It's at the 8 EMA. If it can keep going, then I mean, your next target is 112, 115. So I don't necessarily think that, you know, getting long here is like, I know that it's very tempting, right? Like, the market's been pretty destructive. We've been down on the lows. You would think that it would be time to buy at some time in the near future. But at the same time, I mean, if you look at Apple, for example, it has hugged the 8 EMA, which is this blue line, literally all the way down. And there's only been a very, very few moments in time where it actually broke up to the 21, which was during this short squeeze where it hit that level for 4 days, during this short squeeze where it hit it for 2 days, and then up in here. So I look at it and I say, do I really want to get long here? And it's like, well, you know, you definitely could, and you could target the next zone, which is going to be 140. You got another like $4 of upside. I mean, you could do it as a day trade. You could do it as a short-term trade, maybe like 2 or 3 days. But just because of the way that the market has traded this year, it just doesn't give me a ton of confidence to come in and start putting on a bunch of, you know, bullish swing trades, because the majority of the time when the market gaps up like this, it just rolls over and dies. So we got through the initial first 15 minutes, and I mean, we're definitely still holding up. You know, you've got ticks up above the zero line. They're at 430, which is not super substantial. And you know, now they're climbing back up to 600. If the ticks can remain up above 600, then that is a very good sign, and we might actually get a little bit of continuation. And you know, trading the Nasdaq from 11,600 to 12,000, I mean, there's space in there. And trading the S&P from, you know, 3760 to 3,800, I mean, there's definitely space in there, but I would just consider it to be like a day trade move, day trade, or like a 1 or 2 day move. What is the blue line on Apple? This one right here. So those are going to be the EMAs, the exponential moving averages. So this one is going to be the 8 EMA, the 21 EMA, and the 34 EMA. And this one is going to be the 100 simple. This is the 50 simple, and this is the 200 simple. So when you're looking at all those, when you're looking at all those, what that tells you is the moving averages are stacked perfectly and prices below the moving averages, and that's a downtrend. So what that tells you is that every time the market rallies into one of these levels, it's usually like a short zone. Let's see, then we have Microsoft. Microsoft is bouncing. Microsoft's at the 8 EMA. I mean, again, it's a decent move, you know, up to 250, not terrible, could be worse. But if it can't make it through that zone, it's not going to keep going, and the next target is going to be 260. Then we have Tesla. Tesla is one of the stocks that's usually like the best stocks to bounce off of the lows. And when you're looking at this year, you know, you're up what, 6.8%. When you're looking at this, Tesla's already headed to the 21 EMA because it's, you see how it's broken through the 8 EMA? Well, that just means that the next target is going to be the 21. And that's going to be right around $700, which, I mean, you know, decent, not too much higher, but there, you know, it's a little bit higher. Tesla can make a move like that in 5 minutes, so I wouldn't say that it's anything too crazy or any move that's too significant, but you know, if it could make it up to 700 and then through it, your next target would be 750, and that would be the juncture where you're really looking at potential shift here, and you're really looking at things are changing. So when you are looking at this, you could definitely try to keep trading Tesla higher, just because Tesla is one of the stocks that generally will rally the hardest when we do start getting an index short squeeze off of the lows. So when you're looking at something like that, I mean, it's worth a shot if it can break through 700. I'm having a really hard time looking at these stocks and thinking that they can rally for that long, because we're now in this time frame where earnings is coming up, and we're still in kind of like this weird time in the year. At the end of June, we're not quite at the end of June, it's not July yet, nobody's really talking about earnings season yet, but they're going to start talking about it really soon. And the problem is in this market right now, the macro situation is just so weak in such a wide variety of areas that I cannot imagine that this market could actually put on a sustainable rally going into earnings just because of all the pessimism. And so, yeah, there can definitely be a short squeeze for sure for a couple days, but that's not going to, you know, fix the bear market. And especially when you look at something like Tesla, Tesla has literally so much investment. So Tesla has a big investment in Bitcoin. Bitcoin has gotten totally trounced. I mean, even just for that reason alone, I can't imagine that Tesla has, you know, killer earnings this quarter, because over the course of this quarter, Bitcoin has gotten cut in half, more than cut in half, just in one quarter. So if you're looking at Tesla and you're saying, okay, well, you know, they did a killer job last quarter on earnings, they gapped up 10%, big move. But then after that, I mean, they've just rolled and died ever since. And I mean, I'm a huge Tesla fan. Like, yes, I would normally bet on Tesla to do well prior to earnings and also on earnings. But with that Bitcoin move, it is just such a it is just a canary in the coal mine, because you've got that problem. You also have the whole Elon buying Twitter, not buying Twitter, which it's definitely waned in the news as of late, which is good, but I mean, it's not gone. It's going to come back. Then you have, Microsoft that Microsoft has already come out and said, hey, you know what? The increasing dollar is impacting our sales. And I mean, they were smart to pre-announce that as early as they did. And companies have gotten pretty smart about making those kind of announcements a couple weeks before earnings. So it kind of wears off by the time that earnings happens. But I just feel like this quarter we are in for pessimism surrounding earnings. I just think that the increase of the dollar, I think that energy costs that have increased so much are going to be a major problem for pretty much all companies, like especially Amazon. Anything that delivers a physical product is going to be so much more impacted by these rising energy prices, and Amazon is a number one bet. Okay. And when you're looking at crude and you're looking at XLE, I mean, I think it's come down really nicely. I was reading something over the weekend like, oh, XLE fell 20% from the highs. And I was like, what? Is it really already 20%? And here, I have another grid where I can get the exact percentages. I think XLE looks like a good buying spot here. I've been avoiding trying to get into XLE just because it's been so overextended. But I wanted to add some more in my long-term accounts. And I think that now it's finally the spot to do it because it did actually fall a pretty substantial percentage. And here, let me just add it in here. So XLE. So get this, it's down 18% from highs. How crazy is that? Like, it literally dropped from being the strongest sector in the market to falling 18% in a little bit over a week. So I've been waiting for a spot to add more in my long-term account, just buy the XLE ETF. The main reason why I've been avoiding trading it is I just feel like the politicians are, with the midterms coming up, I just feel like the number one thing the politicians are going to do is they're going to attack this area to try to make it look like they're, saving us all from terrible gas prices. And I'm concerned. Oh, why is that doing that? I'm concerned at what that could do to a short-term trade, because the worst thing is when you get into a trade and you do it based on a really nice technical chart, and then there's some random announcement and it just blows up your trade. And I feel like that is what is going to happen within the energy sector, which is why I haven't been too inclined to actually trade it. But I think it's a good spot to add it to a long-term account because it's finally come down. I mean, oil prices are definitely still high. I mean, a lot of this is just supply and demand. And when you're looking at the summer travel season, I was doing a poll in the options gold room and I was asking people, are you still going to travel with the high costs and everything? And there's definitely some people were like, no, I'm not going to travel. And but there was a lot of people who said, hey, I know it's more expensive right now, but the pandemic has dragged on forever and I'm going. I personally am definitely not going to spend like any money on an expensive vacation, but I will go see my family. And to me, like, family is just the most important thing. So I don't know. I was doing a poll for that just because I wanted to get sentiment from people. And so what that means is that when you're looking at energy prices, there's definitely still people traveling. And I think that other polls that I've seen have reflected that as well. So if people are going to travel this summer, then the energy prices would remain elevated, was why I was asking those kind of questions, you know? How do I get fibs on my chart so quickly? Because I'm a master. Because lots of practice. Lots of practice. I just look at a chart and I can envision where they go. Powell's semi-annual meeting with the Senate will be hot. Don't see how anything he says tomorrow will be bullish. Knives out with the senators. Oh, for sure. Yeah, generally when Powell talks, what happens is this. The market will rally a little bit because they'll say, you know, the market will be like, oh, you know, maybe Powell is going to save us this time. And then what happens is he talks and it's a giant womp womp move where it just kind of rolls over. So I don't have too much hope for that. The only hope that I have right here is a continued short squeeze. Right now, we are continuing to get some buying. So you can definitely try to buy some of these relative strength winners if you want into today and tomorrow. But I'm not going to throw really too much behind this move right at this point. I would rather look for areas to short on this rally, but we're just really not there yet because it needs to go a little bit higher. So that is all I have for you today. Thanks for joining me. I'm going to be in here every morning except for Fridays. So I will see you next time. Have a great rest of your day.
For joining us for Simple Stream Week. If you would like to continue following our market analysis and get access to other free education, sign up for our free room with the link in the description.
All right. Good morning, everybody. Happy Tuesday. I hope you guys had a good holiday weekend. As always, we'll start with SPX this morning. I did not get to the Sunday update with it being the holiday weekend, so I might try and sign on tonight. Do like a Tuesday night update for the week on the $500 challenge, and to look at the market for the remainder of the week. So I do apologize about that, guys. But we just decided to hang out with the little ones, so take advantage of those holiday weekends, you know. Hey, Lorna, Lee, great to see y'all. Ray, Sergio, Mirza, hey guys. Hassini, David, Larry, I hope you guys are having a good trading day right now. So let's dive into SPX this morning. And of course, if you guys have any other questions, whether it's about a chart, a strategy, an indicator, anything at all, please let me know and I will be happy to try and answer it to the best of my ability. William, no, thankfully they're upstairs playing. Oh, no, you don't want the baby indicators on. One, the market might go crazy. But two, realistically, you might not hear anything but them. So starting with SPX, we had that nice gap to the upside for anyone who was bullish this morning. Well done. I actually wasn't sure if we'd get any sort of volatility this week, and I'm still not sure exactly what the volume is like today. Is there a lot of volume like a normal trading day, or is it already looking lighter this morning from for it being a holiday week, right? Are people actually taking this vacation, or because it's the very first one the market's kind of quote unquote celebrating, maybe most of the hedge funds are still here trading this week? Either way, though, we are getting the nice pump to the upside. On the hourly chart, we basically opened right at the 30-period simple. We're holding that as support, and we're working our way, it looks like, right into the ATR trailing stop, which is 37.81. We do have a mini level around 37.75, which we're getting close to, that you want to be cautious of. That's a psychological level. And it is also a price level where we've seen the price stall out back here, right around that range. And that's also, not too far away from the ATR trailing stop. So it could be that we start to pause here, right? The momentum's had a great reset. We're seeing some signs of consolidation. At this moment, I would argue the Bollinger Bands are still pretty flat for the most part. If we do end up breaking this level, it could be that we're just working our way up to 3,800, right? Testing that as a psychological level. So I would anticipate us to at least maybe start pausing a bit after this run up. Maybe taking at least a little bit of a breather from an intraday perspective around these levels. Otherwise, if we do start to break, and my next target to the upside would be the highs of last week around 38.25 to 38.35, right in that 10-point range, followed by the psychological level of 38.50, 38.75. But more importantly, maybe we could finally work our way back up to 3,900, right, and fill that gap to the upside. Now, I'm not saying that's going to happen all today or anything like that, but those are the levels in general I am looking at to the upside. If in fact we do end up holding resistance, right, instead the ATR trailing stop holds very much like it did last time, or like it's been doing since it's turned into resistance, then we could work our way back down, certainly to 37.50. We might see a slight pause there. You can see that's where we saw a pause earlier this morning when the price stalled for just a second before this next run to the upside. If we end up breaking that level, though, ultimately, I'd be looking for a move back down into 37.25, 37.20 to test the 30-period simple and right by the open. If we end up breaking those levels, then I would look for a reversal back down towards 3,700 to test that nice psychological level, as well as fill that gap that we made to the upside this morning back down overall. If we start to break those levels, then we could start to work our way down to 36.75, 36.80. That was kind of a support level we ran into on Friday from the intraday charts, followed by ultimately this 36.50, 36.40 range to test the recent overall lows that we've seen. Now, as of right now, right on the smaller time frames, things are starting to turn bullish. And, we've had a very nice update today. So we'll see whether or not we're able to break these levels and play to those ranges to the upside I mentioned, or if it ends up holding and we start to consolidate. Keep in mind, it could be that we just turn flat the remainder of the day and we find ourselves basically between 37.25 and 37.80 in overall consolidation. And we had the majority of the volatility in the range that happened this morning. That could also be the case. Just a reminder of what we kind of mentioned last week. Like I said, I don't know how the volume will be, so it will be kind of interesting to track this for the very first time in history, right? But typically on holiday weeks, you see lighter volume until you pick back up towards the end of the week and you get back into like a normal trading routine, if you will. Usually the market overall in that case sees more chop and consolidation, with usually in a bullish market a slight trickle to the upside. So maybe that's what we'll get this week. Maybe it will be a trickle to the downside, right, because of the overall bearish sentiment. So far with this morning and the gap up, right, you'd be inclined to think it's more going to be to the upside than anything, if this morning is anything to go by. But otherwise, it's typically more chop, and you need to be mindful of that. So things like theta decay might be more your friend this week if we do, in fact, just kind of hang out in this range and see a bit more of a pause. So be aware of that with your strategies if you're doing anything short term with this week's expiration. And then Sergio, sectors or stocks I recommend shorting this week. Well, I don't have anything individually on the list where it's like, man, I'm really looking to short this one necessarily. I've been trading more just the indexes themselves. I mean, I think that's pretty clear in the $500 challenge account, right? We've traded 3 things this year. The majority have been SPX, a little bit in Amazon, and then just a tiny bit early this year in Tesla, which wasn't doing me too good. So I just kind of put a pause on that, right? and I don't know if I'd necessarily short the market here. And the reason why is because we've seen this really nice selling. So we were talking about how we could use a little bit of a pullback, a little bit of consolidation. We're starting to see that reflected in the momentum here. If you did take a bullish trade off the bullish divergent bar Friday, well done, right? You followed through with that higher high and you're looking at the quick win there this morning. So feel free to take it. The trend is certainly overall bearish, but see, I don't want to necessarily short immediately here, Sergio, because there's room to still trade up into daily resistance. So if anything, what I wouldn't mind considering doing, which is a strategy I've been doing a lot this year, is doing both a call and a put butterfly with the idea that I don't mind which way it goes as long as I get some sort of bit more of a volatile move up or down, which even during a holiday week typically hasn't been out of the question, right? So I would probably even wait until later today before doing anything at this point. I kind of want to see how the market holds up, right? If the market immediately pulls back and we're making a bearish divergent bar into the close, well then, yeah, come and find me and we'll look at shorting it together, right? Because that has, one, a good probability of a lower low and a bearish trend. I'm all for it. But otherwise, and even if it does print the bearish divergent bar, part of me would still be inclined to put on the call side, because we've seen a lot of times in this market where with the volatility itself, sometimes you have an opportunity to take a profit on both. And then of course, if you're wrong, if the holiday week and everything else continues to the upside, then you almost have that call side on as a slight insurance instead. So I don't know if there's anything that's like screaming at me, oh, this looks like a great setup. Like this back here, honestly, when it started to fail, especially when you had this squeeze kind of printing on and off, this was a great sign to short. Unfortunately, I had like just started to come back from vacation, so I was like trying to wrap my mind around stuff, right? But the retracement, the fail of resistance, the fact that Bollinger Bands are flat, and then you're giving back up the moving averages was a good sign you'd at least get down into this range, if not lower. So now, if anything, right, you're kind of waiting for a bit better of an opportunity, even if it's just a pull back into the 10, right? That would be a much better spot to short at. And that the 10 period simple on the daily is currently at 38.57. So that's, you know, roughly 100 points higher, 90 points higher that you could be shorting from. So hope that helps you out. Sorry, it wasn't the best one, like best answer probably, where you're just like, just give me a symbol. And then you mentioned shorting XLE last week, made some wins, but then it rallied today. And let's take a look at XLE. The other thing, really quickly, just to round out SPX before we go on though, guys, the other thing to be mindful of and why I'm a little bit cautious of a rally here is because on the monthly chart, right, we've pulled back, certainly we've sold off, but Bollinger Bands still, at least at this point, are in consolidation mode. So notice how they're not flattening out, they're not opening up, they're still coming up to meet the price. So that's a good sign. It's not, at least as of yet, anticipating a break here. That might change by next month, but as of right now, that's the case. The second thing to note is, of course, we are getting closer into the end of the month, right? How long do we have? Today is the 21st. So by next Thursday, it's the end of the month. Well, if by next Thursday we could bounce back up to hold the ATR trailing stop, which is, I believe, at 39.14, if I remember correctly, or the 30 period simple at least, which is at 38.46, which, you know, wouldn't be out of the question from where we're at now. But if we could get a little bit of a bounce to hold those levels, then that's a good sign that the monthly chart is still more in consolidation rather than selling off. Could be a very wide range of chop. I've been talking about that for a while now, right? It could just be that we're in a wide range of chop. But that's what we would need to kind of wait and see whether or not we get that on the technicals. If instead on the technicals we're breaking support very much like we are currently, right, that turns into resistance, and then we see next month these Bollinger Bands start to open up, that is not a good sign for the market, guys, right? Then once again, Sergio, come find me. We will be shorting this together, right? We'll look at some bearish trades to implement. But otherwise, as of right now, you're kind of towards the bottom of this potential consolidating pattern. And so that's another reason why personally I'm just a little cautious and why I would still, as of even on shorter term trades off the daily, prefer to trade both sides. That way I don't necessarily have to be right in direction as long as I'm right on the underlying price reaching my levels and seeing that volatility within the market, which, you know, overall this year has been a pretty good bet. And then Larry, so on SPX, we have a 14.5 times larger volume compared to the last 5 days. Okay, thanks, Larry. I appreciate that. So the volume is there, is what you're telling me, or it sounds like it. And then are those levels for today? Well, they're certainly for today, but they're usually they can play into the week unless something, unless we're really just ripping to the upside, right? Or ripping to the downside. But otherwise, yeah, those would, if we're like in this range of consolidation, those are absolutely levels I'd be mindful of for the week in general. And then would I buy, I don't know where the quant H2 level is, PP. I don't have that up on my charts. If it corresponded though with a resistance level, yeah, it might not be a bad place to do an intraday trade if you keep your risk low. And then, yeah, question about the challenge. So last Friday's trade expired last Friday. Unfortunately, right when I posted it, so for the SPX challenge trade, for anyone who participated in it, unfortunately, right when I opened the trade, it started to kind of reverse back down. And what ended up happening is we were in a very tight range. Where's the daily chart? There's the 2-minute chart. That's what I was looking for. So we were in this range of consolidation, and we had a really hard time breaking above the 100-period simple on the 10-minute chart, but we are still seeing the Bollinger Bands come up here as well, so they weren't breaking support either. And so we basically consolidated in this range. I was looking for it to close more to the upside at that round level of 3,700. Especially with the bullish divergent bar that we printed here. I thought there was a better probability of us going back into this range into the close. And unfortunately, it went down to the opposite side of the wedge, if you will, and it went down towards 36.75. But on that trade in general, so I did lose on that trade, right? Still up for the month, so can't complain. But overall, for that trade, it is same day expiration, and almost always I've only like day traded once in the challenge account. So usually, unless you see a follow-up alert come from me, I will almost always let that cash settle at expiration. So it didn't hold over the weekend or anything like that. It should have cash settled over the weekend, but it did expire that day. So that's why, there are definitely a lot of trades because there's no time to manage it. You're either gonna, try and day trade it for a quick profit, or you're going to let it go and see what happens. But whatever you're putting out there as your risk, you need to be okay with losing. And then, it kind of goes from there. So I hope that answers your question, but it should have expired over the weekend. So unless you got a trade that was, a different time frame, within one, well done. It should be profitable, right? Because it was a broken wing butterfly that was bullish into 3,700 or higher. So if you did that, then well done. Take the quick profit if you can, because it should be profitable at this point. But otherwise, if not, right, if you're like me, then unfortunately it settled for a loss over the weekend. And then, William, do I anticipate any surprises with Powell's Senate meeting tomorrow? I mean, whenever the Fed speaks, there can always be a surprise. So that's a good question. Let's go back here to the daily chart really quickly, and then we'll go over to XLE because I don't want to forget about that. But back here on the daily chart, so here is an example of a Fed announcement. This was the kind of move off a Fed announcement. Last week was a move off the Fed announcement, even though we didn't really get the stronger run I was looking at. Still, the daily range was, pretty wide overall. This was Powell speaking during an interview. Now, I think the interview was the Wall Street Journal and not Senate, so we could see, maybe more like a Fed range day versus what this ended up being, which was a little bit more muted, I'd say, in a daily range, both in general for this year as well as for when he speaks. But it could be a sentiment like that where we don't really get too much reaction. The thing I would focus on, though, is the reaction the next day, right? Next day after Powell speaks. Market digested the news. That's what happened. Next day, that's what happened. Here was another Fed day, right? And this was the next day. It bounced up, but it had that more volatile move the following day. And that's kind of the point here. We gapped down and then trended lower. So especially if you can take into consideration the gap, right? That's a pretty volatile move to the downside there. So that's what I'd be looking for a bit more, William. If anything, is we may or may not get some movement on Wednesday. But I would definitely, because he talks Wednesday, correct me if I'm wrong, guys, or no, tomorrow. So if he talks tomorrow, does he talk Wednesday too, or just tomorrow? Tomorrow is Wednesday. Oh, I'm off on my week. Market holiday, guys. So Wednesday, yes. So Thursday, basically, I would be anticipating a bit more of a volatile move. And maybe that might be a good day to implement, right, the broken wing call put butterfly strategy with the idea of, I don't know if it's going to be a move up or a move down, but as long as it's a bit more of a volatile move, I could look to take a profit from it. Toro Joe, drive safe if you're off I-35, or if you're driving, right, on I-35. Verticals did a call debit spread on ZM. Once it hits the higher strike, does the option continue to go up with the underlying stock, or does it stall because you are past the width of the spread? So if it's a vertical debit spread, Toro Joe, once it starts to go in the money, the idea is that if it goes into expiration, it will cash settle for the width of your spread. So if your width of your spread is a 5-point spread and the mark currently on your vertical is like 450, well, then you're close to where that settlement price would be at 5. So you might just consider taking the guaranteed win now in case Zoom decides to reverse against you, right? So that's the unfortunate thing about verticals, is it does limit the profit potential because it limits it to whatever the width of the spread is in this case, minus your cost basis. But the good news, of course, is that it probably costs you less risk compared to just getting into the long call by itself. So XLE. So, okay, Larry, yeah, definitely the higher volume. So yeah, if that's the case, then we might not get a typical market week if this is actually on volume, right? Because sometimes what happens is you'll still get a little bit more of a move than you might have been anticipating during a holiday week, but it's on light volume. So it means that not a lot of people are actually pushing the underlying price higher. But if we have more volume than typical buying in on this, then yeah, this might actually be a bit stronger of a move, to where if we start to break these resistance levels, right, prepare maybe for a stronger pullback, right, a bigger bounce, if you will. But it means that it's definitely happening on, it's happening more on strength than just one or two people kind of messing the underlying price around, right? It's actually happening with some weight to it, if you will. So XLE, oh yeah, this was a pullback last week, right? I think this happened a lot in the energy sector. It wasn't too surprising to see, because on the weekly chart for a lot of these things, we were at exhaustion levels, right? Or we were starting to push past the top of the axis on the awesome oscillator on the weekly time frame. So it makes sense to get a pullback. Now, oh, this is a monthly chart. Let me go back to the weekly. So there's the weekly, right? There's that clear exhaustion here. So we're pulling back some. It needed it. Even the monthly time frame now looks like it might need a little bit more of a pullback. But remember, when momentum pulls back, the price can just chop here. So in regards to a support level to buy in at, yeah, the 30 doesn't look like a bad spot to consider. Just keep in mind, to me, my line in the sand would probably be around 70. I would need to see it hold 70 ideally for me to remain bullish in this. Otherwise, if I bought in here but it starts to break 70, I'd probably close it. And if I wanted to be bullish, wait for a better support level to enter here. The reason why I don't think this is a bad spot is, even though there's still a lot of room for momentum to reset, if we remain in consolidation, well, it looks like we're at support of that consolidated range. So we could easily work our way back up to 81 to test the 10. We could work our way back up to 90 to test, the recent highs. Notice the Bollinger Bands on the upper side, they're not necessarily forming a pinch to pull back towards the price. They're pretty flat for the most part right now. Now that might change again, but if they remain flat, kind of like they did back here, right, it identifies that, one, it's not coming down to meet the price, so it's giving the price a lot of room to trade in this range. And two, even though it's not considering a break of the prior highs, it could certainly allow the price to go back up and test them and stay within the comfort zone. So yeah, I don't think this might be a bad spot to jump in at. I would be mindful of capital, especially because from a daily standpoint, you're below the 100-period simple. That's never a good sign. But on the flip side, you do have the true lows. So if you can start to see these Bollinger Bands flatten out, ideally, might not make a bad buy-in spot. I will say the energy sector, right? That kind of stuff that's been a bit more of a honey badger this year, that's been to play the true lows recently. So if it can, for me, I would almost want to see it break and hold back above 77. And I know that's like a little ways away compared to the 70 price level I want to see hold. But I would ideally like to see this break back above the 100 and try and hold that for me, just to get a little bit more confirmation that it has a better chance of going into 80, 81, if not up into the daily resistance around 84. So that's what I see with XLE. And then Papillion month end quarter rebalancing Wednesday and Thursday. Yeah, that's true too. That could bring in some moves overall, right? Because all the big hedge funds will need to close out of trades. They'll need to roll them out or reposition them, kind of like what you're talking about. And so that does typically happen Wednesday or Thursday. Not as much something I pay attention to from a seasonality point, but if you guys are interested in that, certainly Eric, I think, comes in here, Neil as well. That those are two good people to talk about more in depth for that kind of stuff. Or Bruce, I think Bruce pays attention to that too. And then Trader G with Max Payne on SPX today at 37.50. If you can get a super cheap butterfly early in the day at that level, something to consider as more a lotto play, absolutely you could, but I would still consider it that a lotto play. The reason why I like waiting personally closer into the close before doing anything, even if there's a Max Payne, and that's not to say every now and then I won't do it, I will, but I have found even when I do it a bit earlier in the day, it's still, and there's the Max Payne, guys, right? Just to confirm, 37.50. But I found like even if I put on a butterfly around Max Payne here, it's total like throwing a dart blindfolded, playing pin the tail on the donkey, right? It's like you might get the tail on the donkey or you might get its eyeball. It's completely off and you don't win. So I would say just keep your risk tolerance where it is, because that's kind of what it's like early in the day. Like I said, I found that sweet spot to be a bit later in the day because I have a better probability and timing of getting those levels that I'm looking for and stuff. Or at least that's, you know, that's what I found that's been working for me. So that's why I wait. JB, I don't trade futures, so I probably wouldn't be the best person to ask. My question would be though, do you have extended hours on? Because maybe it will only pop up on extended hours trading versus, you know, when you don't have extended hours on, you might not get that extra information for the futures stuff. I don't usually have extended hours on myself, so that's why, you know, maybe that won't pop up for me, but that would be my guess. Oh, you do have it on. So Lee, is it closed for futures as well on Monday on a market holiday? I have no idea. So I revert you to people who might. Certainly a good person to ask if they come in the room early would be Joe. JB, so that might be somebody to ask. I don't know if he uses Thinkorswim, but I know he trades future. Yeah, absolutely. Or Jack, if he comes on in here, he trades minis and micros, so he might know. Okay, Mad Mike's mentioning they're open until noon yesterday. And Soaring Eagles confirming. Okay. Yeah, I don't know why I think Thinkorswim wouldn't show it then. Oh, I show it. You might need to refresh, JB. I see 620 on mine. On the daily chart, at least. Let me check NQ for you, too. But I did also reset my charts. I don't open and close Thinkorswim very often, just because I hate having to reset my workspaces. But that might be what you have to do, because they're popping up on my charts. Yeah, of course. Absolutely. Always happy to help out. And Lee also says he has it until noon. So So guys, that's basically my time too. Thank you all for joining me this morning. I hope you guys have a great rest of your trading day. If I see a $500 challenge trade that I like into this afternoon, whether it's on SPX for a lot of trade or maybe a swing trade for the week, I'll certainly let you guys know. You know, like I mentioned, here's it for the month. I'll try and do a proper update later tonight. But we're up still about $500 for the month. So we're still looking good, still have plenty of capital to play with, even with our loss on Friday. So we'll try again. As always, guys, may the trade be with you, my fellow Jedi's, and I look forward to talking to y'all next time. Bye.
For joining us for Simple Stream Week. If you'd like to continue following our market analysis and get access to other free education, sign up for our free room with the link in the description.
Good morning, everyone. This is Henry stepping over here into the trading room. Good deal, Ann. Good to see you today, and thanks for being here. I hope you all had an enjoyable weekend. Things are getting started with a bang here on Tuesday with the S&Ps up nearly 100 points. So some pretty significant movement off of some sentiment readings that I'll look at with you. Go through a few individual equity picks, maybe look at a few commodities. And as always, if you guys have questions or anything on your mind this morning, please do let me know, and I will get them into the mix as I can. So good morning, DM, Mirza and Lee, Lorna. Thank you guys for all confirming that the feed is good here as well. Good morning, Soaring Eagle and Teresi, JB and Dragon. Cheryl, good Tuesday to you. As we assess a little bit of what's going on in the market this morning, the strength is there. The market is doing what it needs to give the appearance of a rally that could be a little bit longer lasting, right? You've got the Nasdaq that's up 3%, the S&P up 2.5%. So, those are significant top line numbers. And then when you look at under the hood, Tesla is up 9%, Amazon is up 4%, Apple up just shy of 4%. So a lot of these very important names are showing up today, and they're showing up to a pretty meaningful degree. I would also say that as far as the continuous futures contract is concerned, the clearing of the 618 retracement begins to set things up for a little bit more bullish potential. So actually, let me modify this and grab the low down here at 36.39. And what we're looking at, or what I was considering this morning, was the potential that when you rally as much as we had into the 618 of that bigger down move, that it is an area that can potentially show a pause. Well, we had a little bit of that pause there for maybe 10 or 15 minutes. Then as you give the day a little bit more time to, just to see what it wants to do at that level, well, it's just pushed right up through it. So as far as that pattern in and of itself is concerned, it starts to lead into the old high or into the high that you run the analysis from. So going back to the 78-minute chart, you can see that previous swing high is 38.43. So that is one area that we could be moving up into. And then from there, extensions of that swing. So there would be even higher targets up there to be had. It was mentioned in the option session, another trader had pointed out that when I was quoting the extensions of the previous swing high to swing low, so we're looking at this swing high against this swing low and quoting that into 1272, and then the following extensions will come after it. And that's a fair way of thinking and marking off price. But then you can also see this gap. So right through here, right, this is what happened last week as you kick off the trading week, and you see that gap right there and how that's right there with the extension. So I think that makes good sense. 30, let's just call that 38.95 or 3900 if you wanted to be a little bit more lenient. But that seems like the place where we are likely headed. So I'll probably remove the retracement off my chart. Again, that's through it to a meaningful enough degree to think that it's going to just keep going through it. Now, of course, there could absolutely be a pullback at any time inside of that, but that is a pattern that I like. And then if we have another look at that just in SPX to see if there's any kind of relationship there. Take the 38.37. And it has cleared your 618 retracement there also. So bulls are doing what they can to put a little bit more of a bullish twist on these patterns. And until I see something change, that's the way that I'm going to continue to lean on it. Now, one thing that is starting to set up here, and it's not doing it yet. So give me a couple of days before this is something that you really lean on. And of course, knowing that it could move further. If the S&Ps are going to be moving on a relatively direct path up into 3,900, well, then this put call reading is going to become further exaggerated to the downside. But look at how extreme it's on from, a reading up here in the upper part of this, a fresh 21 period high. And then just 2-3 sessions later, you're already on the other end of the spectrum. So, all that's showing us is a market that got very bearish and then is getting its head ripped off. Then it's going to get very bullish. And, I think something similar could follow. So just going to have to wait right now because that is a sentiment reading and we want to follow price first. And, for now, price is very bullish. So let that keep ripping. But, as you get up in there into those overhead extensions, everybody's leaning on the market, kind of being in one direction. That's usually what sets it up for a turn in the opposing direction. And then would you short the Nasdaq at the H2 daily quant level? What level do you have for that, PP? Interesting. 645 on the money, huh? Because I've got 645 right here as this skyline. And it is a point of focus. Like you can feel the pause at these levels, right? I mean, if you were to come into a 5-minute, it might even look a little more detailed, in the way that it is straight up into the level, then it does begin to level off. You've got a good question, and I like the fact that you take that level, and I've got that skyline. I've got a couple other things here that coincide with it. I usually will not short something like that when the tone of the day is so bullish. Now, to be fair, you may be on you may have exactly the right idea, and it may be a spot that is getting ready to be a short. But it also feels like it could take a few minutes, like I think a lot about them when I have this discussion with other traders. It's like your question came up here in this moment, right? 41 minutes past the hour. And it's a little incisive, but in the next 45 minutes, it could end up looking great. The other reason why I pause a little bit on this and why my first reason is to be looking at that and tell you, no, I would not short that, is because of the advanced decline, right? Remember that when you ask like, hey, I've got this H2 level, and this is where I'm thinking that I want to establish a short, try to take them, or I should say your most successful attempt for that will be where they are within the context of the broad market, right? Because when you look at that advanced decline that is at the dead highs of the day, when you look at the vol spread that is at the dead highs of the day, that is the straight up analysis of price, and price is very strong. So to look at it and say, hey, I've got a level and I want to short it, that's kind of like saying, I can see that this stream is ripping, like the current is really strong, but I'm just going to jump in and hope that I can swim against that current. It's not an intelligent decision, right? You want to try and find a spot where you're going with the current and that level backs that decision. So I would tell you that I don't see the short in it. I think right now, everybody that was short, you see how this rally is so ferocious? You know why that is, right? It's because of this high put call reading that on that move, that would have been on Thursday, right? That action drove that put call reading to the highest value that you've seen all year. Well, when all of those participants are just buying up put options, this is the type of rally that it will spur. So, let all of those shorts get squeezed out. It'll pop it into some type of exaggerated and climactic kind of move. And then when that is made, then you start looking for some of those other levels. So, right now I just don't see a way that you can do that. But I also know enough, and I've taken enough questions from enough intelligent traders to know that that actually could still be a spot to turn down from. It's a little dicey. I don't see it just yet. And I elaborate on this. I'm kind of going over it and telling you, like, kind of repeating myself a little bit because it feels like it might come through. I mean, truly, the quant pivots are a good indicator. I don't always have everything up on my charts. It kind of, I thought today, especially after a 3-day weekend, is a spot to kind of let the market tell me what it wants to do. Well, of course, it started off very strong here, but I didn't have the quant levels up this morning, but as you point that out, and it's right there at the skyline, it would just be the perfect spot for them to ultimately end up defending it. And that's why I don't want you to just walk away from it and not be involved with the short because of what I was telling you in the internals. Just know that you're trying to take a little bit of a counter trend stab and don't get stubborn. Don't short it and then add to it and then add a third on the new high of the day. I don't think that's the kind of day to be doing this. But if you can nibble on it a little bit of it here, add to it as it starts to go in your favor, you could probably get back to 11.5. So that's interesting. That actually does pique my curiosity. You see it now turning down just a little. To me, it's the fascination of the precision of technical analysis, where so many traders may look at the market and tell you, I trade and I don't even look at a chart. I'm like, well, then you are leaving money on the table because technical analysis absolutely has merit. Again, and thinking about how it's like, all right, I didn't happen to have the quant levels up today, but it's doing the same thing as the skyline. So right there at that same 645 is our decision point, but I'll probably leave it alone before I get too into the idea because, tried fading from it, but then just as quickly pops back higher. Bulls are in the lead here, and you're going to have to let them continue to be in the lead until some of these key names start to give up their gains on the day, and that is just not happening right now. Man, Tesla, the best of the day, up now 10%. I thought that was going to have a little bit more of a pause at its gap fill, but, needless to say, even from 700, you still had some room for a day trade in there. But I hope that helps, PP. Let me know if you run into anything else. For now, the tone of the day and bulls being in charge is the order of the day. I kind of just have to go with that until something changes. Some of these others that are doing really well today, NOG doing well just because of the drop that it saw on Friday. ARC probably squeezing a few shorts, but is... I'm just having to wait for this one for the next opportunity to really establish a short in it. If we look at it, I kind of like thinking about this for its potential in timing, which is just to say I'm looking at this last advance, which lasted a pretty good while. I don't know if it's exactly 2 weeks, but I'm just going to look at this swing low against this swing high and think if something like that can occur again. Right, where it just meanders higher for the next several sessions, the better part of a week. And then you get over there into the 29th, where this rally mimics the previous rally that you saw in time, right? Something through here is mimicked off of the move through here, and then it's ready to do this again. And it's just not today. But I really do like ARC for its bearish potential. I think you need to take out the 35 and a dime, right? That is our current 52-week low. And once that is taken out, then below 30. So I am looking for spots to be short that one again, but just haven't done it just yet. I'm also stalking Beyond Meat in the same way. So once it breaks 20, it's going to get down into the teens. And I wouldn't be surprised to see it in the year in single digits. So I still like that one to the sell side. A big part of this strength is moving in sequence with Bitcoin holding the 20,000. So that fire line was a little, kind of bled below it just a touch, but then it comes back to the psychological value of 20,000. And since that has held, that helps the rest of the market. Ethereum kind of doing the same thing up here at 1187. So when you think about confluences among products, I think that was a really important one, right? 20,000 in Bitcoin, 1,000 in Ethereum. You probably don't need me to tell you this, but all the same, it is a factor that I believe is driving the current environment. Bitcoin began the breakdown, so to think that it's finding its footing, it helps equities. They are moving almost in lockstep with each other. So for that reason, I do keep a little bit more of a shorter term view on the crypto markets. Well, that's about all there is to say about them. right this second. Pretty much all the 15-minute squeezes have fired today. You know, I'm still looking for Home Depot down into this 215. And for now, I've got front month options. So of course, now that the June witching expiration is behind us and I'm out here in July, I have to start being a little bit more mindful of that position, right? Because I don't want to give too much of it back. But all the same, I think a target at 215 looks very good. You know, you look at how strong the broad market is today. Home Depot's up 0.7. So that's really not very impressive. And it is a path where if the voodoo roadmap is what's going to continue to unfold, I think that 215 looks very good. Disney came just shy of its fire line. You know, I look to these because of the same way that Amazon, right? When Amazon tagged its fire line, that was the end of the bearish move. Now, I should actually rephrase the way that I said that because, you know, yes, it was the end, or it continued to act as support. This is the move that I'm referring to. It did have 2 days down here, you know, where it kind of, because what, you know, I'm sure if you guys are like me, you want to see it test support and then go straight higher, right? Because that makes the support the easiest to use. Well, it tagged it, and then it had this little bit of a move down in here. But if, you know, you weren't really tested, like it didn't come out and take out your low, you know, that level remained. And then here we are, a good 10% higher off of it. So that's showing you a pretty good reversal for Amazon, or at least the early stages of that reversal. From there, what I would do is say if that's or if the bounce off these lows is going to be more key and pivotal, then it needs to clear the 618 retracement of the recent decline. So you've got this little bit of a wick that came up into about 129. And then from that move down into this swing low, you know, that 118.46 would be the next place that you could target. If Amazon clears 118.46, well, then that is a bigger shift in pattern, and it will be part of what starts leading us up into 150. But of course, Amazon's also going to move, you know, like you've got to get your mind right, I would say, around this, which is just to say, like the old Amazon, you know, it could move 150 points in a day. Well, now after we've gone through the 20-for-1 split, you know, getting up into these bigger extensions is going to take some time. So it just seems like I'm quoting very small numerical values to you in Amazon. But of course, you know, it's going to take a lot of muscle to get that moved, as where before it was just a little bit of a different situation. And then Biddy is the new inverse ETF. No thoughts on it at this time. How long has it traded? I know you said it was new, and by new, you mean brand new. It does look like today is day one. So 38.31, trying to find some, you know, figure itself out here at the 38 handle. So that'll be interesting. You know, as far as playing it to the inverse, I've just always thought getting exposed through the futures was the easiest way to do it. You know, you could do the micro futures, and those are a much more gentle experience. And to me is more direct than a lot of the ETFs that sometimes can have, you know, other things going on inside them that makes the relationship a little tougher to make money off of. But that is just, you know, my humble opinion. BITO sitting down here at $13. I don't know what the final low in that's going to be. It would be interesting if that was it, right? If we made it here at the 20,000 in Bitcoin, just a little below, but my opinion on that, I would say, is pretty weak. Therapeutic stocks up 10%. Stuff like DocuSign up 4%. That's just waiting for a chance to give that back. Write it down for yourself if you are interested in trading DocuSign. Any move back up into 73.80 would be a spot to look at shorting that. I'm quoting it to you off of the fire line, but you could probably even use the 21 EMA, right? 21 EMA maintains that bearish trajectory. And then as price, or I should say, if price were to rise into the descending moving average, that's usually the spot to consider your next short. And DocuSign, I just think, might need to get back here and take out its lifetime low, 3506, up into 314. Those extensions are not going to be helpful because they'll put us into negative territory, right? Negative $41. And I don't think that's going to happen. But I do think taking out the 3506 could be the path that that is on. But everything else pretty remarkably strong today. S&P is now up 103. So volatility is in there for sure. You've got a tree line in Tesla at 723. So that is now being tested. Amazon kind of flatlined after this first bigger run higher. Those of you that have spent any time listening to me, you know that I've said that Tesla is still one of my favorite companies. Leaves me feeling a little bit left out of it today, especially after wanting it to grab that fire line. But I've made the comment, you know, that there's so many companies that will never see their lifetime high again. But Tesla's not one of them, right? Tesla is going to take that out at some point. That way of thinking would have been helpful if I put it to work today. Up almost 11% now. But, you know, that type of strength and where this is the standout of the day, I just feel like is a testament to that way of thinking. Like, this is still one of the best companies out there. It's just the, you know, the environment makes it a little bit tougher for it. S&Ps trade the 777s. Copper trying to figure itself out at $4. That tends to be an important price for that commodity. And the fire line right there also may give you a reason to think of it bouncing from in there. Along the lines of more precious metals, still not totally sure what silver and gold want to do in here. I am curious about them because of their daily squeezes, but I'm also wondering if, you know, if it's back to risk on for equities, if they could fire short. Right now, I'm not really making any trades on them, but I watch them closely because when the daily squeezes fire, you know, even if I'm a little late to the move, the squeeze will usually give enough of a directional move to grab some, you know, towards either the, you know, the middle or towards the end of the move. So do keep those squeezes in mind. It's going to the moon. I picked up my ex this weekend. Man, that's awesome. And I'm excited for you. You know, it's always funny when stuff like that happens the moment after getting, you know, like in this case, your ex. It's like the universe talking to you almost, right? But no, it's they're amazing vehicles. I mean, I know a lot of us in the room and, you know, on the other side of the mic have them as well. And yeah, they are the future. I'm actually in the process of getting the solar panels installed as well, but the amount of hoops that you have to jump through with your utility company is not nothing. So I'm trying to convince our, you know, first you got to get through the HOA, which is not too bad because, you know, all of their equipment looks pretty professional, but then you have to get through all of the approvals and all of the regulatory stuff. And it's like, oh my gosh. But it'll be worth it once, you know, one, to be off the grid, two, to have reliable power, which you'd think in the 21st century I'd have better reliable power, but we don't. But no, it's awesome. I hope you get a lot of enjoyment out of it. And with that, I will conclude this morning's discussion just that quickly. We're up into 3780. And the S&Ps may not have any big overhead levels until 3,800. So like we were saying, no spot to be stepping in on resistance. Let it just keep chewing through as high as it needs to. We'll find somewhere up here that things start to peter out a little bit, and maybe we'll have a chance to act on it from there. But congratulations again on your X. You guys have a great rest of your Tuesday, and I hope to see you in here again for Thursday's discussion.
For joining us for Simple Stream Week. If you would like to continue following our market analysis and get access to other free education, sign up for our free room with the link in the description.